So you borrowed on every credit card up to the max. You've talked to Uncle Joe. You've asked your mom for the third time. You're finding that there's just nowhere else to go. You need to borrow some money. Well, we're going to try to help you with that today. I've got a very special guest, Gerardo Perez, and Gerardo is with BBVA. Right?
Correct.
But you're not going to be BBVA forever.
No, we are merging with a wonderful organization, PNC Bank, in 3 months. We'll go fully converted into their regime.
And so then you will be taking down the signs and putting up the brand new signs?
Putting up the new signs, and we become, with PNC, the 5th largest bank in the United States.
Oh my goodness, look at that.
And
then
yes.
So there's a real opportunity right now. If you're out there in the audience today and you are a sign maker, you probably want to call.
You know, Randy, that's very great advice, because I'm sure they've got a vendor list from the East Coast where PNC is based out of, and
right.
California is a brand new territory for them that they've never been in. So I'm sure they're looking for people.
I'm sure too. So we talked a little bit before the show. You've been a banker for 30 years and a business banker for 20. You know, that's a really long run. I've known a lot of bankers in my life, and it's not. Sometimes there's kind of musical chairs going on. You've stayed in for a long time.
Yeah, the banking world is a very like you said, very fast-moving, fluid environment. We all end up starting with big banks and somehow make our way to smaller mid-market banks and mid-level banks, and then you just kind of evolve through acquisition or merger, and you end up working with the same people 10 years later.
Yeah, I hear you. It's just now it's a different name on the building. Yeah.
Different name on the building.
That's cool. Well, listen, one of the things, I've been working with small business owners almost my entire life, and written a bunch of books on small business, and been a consultant for the last 15 years with a bunch of different small businesses. Probably one of the number one things that comes up when a company is in that growth phase, that first 5 years, that first 10 years, there's almost always going to be a time when cash lets them down. The oil of the business runs out, and it's like, okay,
right.
I've used up every possible resource I can think of, and I just don't know where to get the next dollar to keep this baby growing. And then we get a confused business owner who comes to a bank and can't figure out how the bank works. What do you guys really want?
A little, yeah. That's a great question. In a lot of cases, we're asking ourselves the same thing. What do we really want? I've been doing this a long time, and I think I've shared in the business banking world, I've always gone by the fact that I look for about 7 to 10 clients a year. And reason being is I want to sit with them and understand their business, what they're doing, and exactly that, understand and explain to them what they don't know or what they would like to know about a bank, and understand how it works. Banks, I think, overcomplicate things for themselves, but the reality is when it comes to running a business, it's having those key partners and having a good relationship with a good accounting firm or a CPA that you know well, that can talk to you and advise you on what a bank may be looking for. The reality, as you just said, at the end of the day, banks are we're looking for cash. We're looking for capacity and income to service debt. So my job is to find that. So I look.
Wait a minute. So in other words, you guys want to get paid back?
Yes. Strangely enough, I think we may be one of the only products that my inventory is cash.
Cash, yes.
And I'm giving you that cash and saying, I'm giving you cash, but I want my cash back.
Right.
And
I think maybe if business owners started from that premise, as opposed to I need money, the premise becomes the bank is going to want their money back, and they're going to want to see that I have the ability to do that, to give them their money back.
Absolutely. Because as you and I always joke to say, regardless of the business, if you're a contractor and have your ditch witches and your forklifts and your trucks and your diggers and all these things, well, that's wonderful. That is our collateral, but I don't want it. I want you to pay me for it because it does me no good. And if I have to take it back and sell it, I get pennies on the dollar because I don't need that and I can't run that equipment, nor do any of my clients ever trust me to get it.
Yeah. Plus you have the emotional headache.
It's fun. I mean, but just coming back to what banks are looking for is normally when somebody comes to the door, we're going to ask on average for about minimum 3 years of financial information. That could be tax returns if that's all they have, or it could be a combination of tax returns and financial statements, a balance sheet, a profit and loss statement, just to kind of get an eye on to see what the company does. And as we were discussing, we're looking for that cash flow. So we add a thing back that you're already doing: interest expense, depreciation, average. We're looking to find all that money because at the end of the day, we're trying to say you need $100,000 at, we'll call it 3% interest or 3.5%, calculates to a number annually of said interest that needs to be paid. My job is then to find enough cash to say, can they meet that payment and exceed it to meet a certain ratio that we would like to see? And that's how they establish whether or not you can or can't borrow.
So Gerardo, if we have this guy, he's got $1 million, he's got $2 million in sales, he's making pretty good money. He's got a nice car. He's sticking a bunch of it under his mattress that he's not telling anybody about. And then he's got a whole bunch more of it that he's writing off every possible which way he can. And the good news is he's not paying Uncle Sam anything. And then he walks into your office. There's maybe a problem there.
Definitely. I think I tell, and I've shared with you that idea that, people don't understand when you're growing a company and you're taking off, you can't have a growth strategy and a not pay taxes strategy. It's oil and vinegar. Any way you want to do, they separate. You can't have that. I always try to tell people here as the banker, I'm not the IRS. I'm not the tax man. I'm going to explain to you and show you this is what I require. So come when you're finishing off your year and you're planning for 2022, you can sit with your bookkeeper, your accountant, your CPA and say, okay, I want to do this. The bank is telling me I'm going to need this much income. Can we do that? And are we comfortable paying taxes on that? Like, I'm not saying to go way abundantly above and beyond and pay every penny you owe. And take your write-downs. Definitely take those write-downs, but do it to a point where it still allows you to grow your company and go to a bank and say, I've got cash. There are things that the bank puts on every loan in most cases where and some of them do it, some of them don't. They may check it annually, they may check it quarterly or semi-annually. And it's a debt service coverage requirement. So basically, in essence, the simplest way to say it, for every dollar you owe us, we want you to have $1.25. To just kind of simplify that.
Sure.
But what the banks call it is a minimum requirement. Unfortunately, business owners hear minimum requirements, so I only have to get to that point. Yeah. And so what ends up happening is a lot of bankers do those loans, get them those loans, and get them that money they need for the moment. But what they've done at that point, if we'll just say the minimum requirement was 1.25%, and they're coming in at 1.26, they're like, we made it. But the reality is what the banker has done is just loaned that person their last dollar. Because they can't come back and say, now I need another $100,000. Well, I don't need to do the math to know if you're all barely at the minimum requirement, me adding more debt is going to push your level down and you won't have the capacity to meet that minimum requirement. So now they're stuck and have profit to be able to borrow more. So I always try to encourage people to say, yes, that's the minimum we're looking for. But if your intention is you may need more equipment 6 months from now, then suggestion, you may want to show more income. And at the end of the day, Tom, it's still your business. You run it the way you want. Yes, I can do this one request. But after that, I'm telling just no one, not myself or anybody else in the banking industry, was going to be able to help you because you're meeting the minimum requirement.
Yeah, I think, almost all business owners probably have purchased a home and done a mortgage.
Correct.
And I think one way to make an analogy here is it's not a lot different than the purchase of a home. There are requirements that you
Hmm.
have on that mortgage in terms of your ratios, what you're earning
Right.
versus what you're going to be paying, what your asset is compared to what your debts are. I mean, all those kinds of things apply to business loans as well. And somehow a lot of business owners go into the banker and they think somehow it doesn't work that way.
It does, and you hit it right on the head. It's a great analogy because they are. But even to that effect, even the mortgage side, residential side, as I mentioned to you earlier, we on the loan side sometimes get caught up with a lot of acronyms and terms that we throw to the borrower, that they're just sitting there scratching their head, just going, just tell me yes or no. Can I buy the house? And you show them the numbers and the ratios, and they still look at you and going, is that a yes or is that still a no? Like, why do you need more information? But it is true. You have to understand that debt to income, capacity to be able to explain to somebody that's wonderful, but I need to be able to see where your money is coming from. That's all it is at the end of the day. The people making the loan are not reporting you to anybody or the IRS. We just need to be able to track. If you're a business owner, well, and you're buying a home yourself, residential home, you're asked the same questions. Well, show me your income, your W-2. Where is that coming from the business? And so they're just trying to track every dollar and put it in a pot and go, your payment's 5,000, you've got 12,000. It works. We got ourselves a loan. It sounds really simple, but I think what needs to happen with a lot of business owners is just continuous education. And I know you guys have programs. We talk to people of just wanting to ask. It never hurts to ask somebody. I think the worst people to ask is your buddy that has a business and you're at 2 million in revenue and they're at 12 million in revenue. And they tell you, oh, I went into the bank and got a loan just like that. And they walk in, my buddy got it. Why can't I? It's two different things.
And you kind of touched on this a minute ago. One of the oldest pieces of advice to business owners with regard to their banking relationship is to start the relationship when you don't need the money.
What's that saying I heard is like, you don't want to start digging your well when you're thirsty.
Yeah, right.
It's yes, when things are good, go get the money, even if you don't need it. You get that line, get that increase to the line. And as you well know with business owners, it comes in cycles. So they're going to get busy. They're going to get the momentum. So the idea of stopping and focusing in on their financial picture, someone gets the backseat treatment as they're continuing to grow and develop and make more widgets and make more knickknacks and sell more product and put it out there. And then they realize we killed it this year. Boy, man, what a wonderful year. And then they look at the numbers and put all the math in and go, why did we only make 7%? Why is our profit margin so poor? And that's the crux, and that's the common mistake, I should say, or oversight of a business owner, because they know what they know and they're the best at what they do. It's just the stuff they're not good at. That's where they got to bring the right team in.
Like the accounting and the financial analysis.
Accounting, the financial. I always look at your insurance, your banker, your bookkeeping side, even an attorney. You never want to have to use the attorney, but it's good to have one that you know and trust. That's kind of like your outside board of directors. Be involved in some kind of business owner group or affiliate group where you can pick other people's brains that are running into similar issues, and you can kind of work with them. But your banker and your insurance rep and your tax person are there to say, if I'm looking to grow 20% come next year, what impact does that have on my insurance cost? How much additional accounting support do I need? What is my bank going to want to see? And if you, unfortunately, you at least have to have one or two relationships with those individuals that can at least guide you and tell you and put you in place, or at least with your banker or your CPA. Having a relationship is key. We're not geniuses. It's not rocket science what we do. We're just crunching numbers, putting them together, and say this is what you can pay. Beyond that, it's explaining to people why it is what it is, and not all growth is good growth. That sometimes stopping at a certain level is better than outgrowing, or, basically you can grow yourself out of business.
Yeah, yeah. You can outgrow your cash. That's a definite. Okay,
Absolutely.
I want to talk about a secret that nobody talks about with regard to banking. I know you're nervous. I can tell that you're concerned. What's Randy going to throw at me here? Okay, here's the secret that nobody thinks about. Bankers need to also make money. They not only want their money back, but they actually have to make money. And if I'm selling a widget and I buy it for 50 cents, I got to sell it for $1. If I'm a service provider and my employees are costing me $20 an hour, I've got to charge $60 an hour for that service. I understand in my business that I've got to make money. Somehow I walk down to the bank and I think they don't need to make money. They've got all the money.
They've got all the money. I always tell people that the secret I will share with everybody is banks are businesses.
Yeah.
That's it. We're a business. This idea that they've got the FDIC that secures everything they do. No, they are insurance that we pay into, similar to you paying insurance for your business. Yes, we can get repaid for certain things, but if we make a bad loan and we do a bad job, it goes to the bank, and it's like losing a project, or underbidding a project and the expenses are too high, or underselling your own product to get it. It's all at the end of we're a business and we're looking for a profit margin. Right. At the end of the day, our profit margin is usually leaner than most business owners. I would love to make a 25% profit margin on all my clients, but it just does not happen, because in this environment, interest rates are low, everything's compressed. So we do have parameters we have to meet, but ours are much lower than most businesses, which is why, doing a variety of larger loans is sometimes of bigger interest to the bank to say, well, I'd rather do two $20 million loans than 40 $500,000 loan.
And that was going to be part of my point is if I've got a $500,000 manufacturing company, or even $1 million or $2 million manufacturing company, or a $500,000 service business, and I walk into a bank, they may or may not even want to deal with me in terms of my loan. They may not, because there's not enough profit in the deal to do the deal. And I think a lot of small business owners are kind of frustrated by that. But
absolutely,
I'd much rather sell $100,000 at a time to Target than sell $100 at a time to the little retailer down the street. So you're no different. So, but you guys, I think at BBVA, you do have a program for the smaller companies. Is that right?
There is. And I think the key is you got to find, in a lot of cases, banks, like any other business, some banks have a tremendous amount of deposits. And they have a great balance of excess deposits in comparison to their loans. Others are very close, where their loans are pretty darn close to what they have in deposits. So banks hedge and take in certain business based on where they stand as an organization. So in this environment where you can get a real estate loan on your commercial building in the low mid threes, well, guess what? We're not going to be paying you 1% on your money market. We make no money, so we're basically paying you less than 10 basis points on a money market account, because we don't need to give out expensive money. Right. We are happy with the cash we have, and we're going to go with that. But the reality, I think the big picture for the banking world is, regardless of the size of the business, whether they're 500,000 or 50 million in revenue, at the end of the day, it's same issues, but at different scales. So cash flow is a concern. Cash flow is a concern. Growth is a concern. Growth is a concern. I think it's just a matter for those small businesses to understand, as you come in, we are a business. We are looking for a particular type of business that makes sense to you, makes sense to me, at the end of the day. But to not be afraid to share where you actually stand with a banker, to have that conversation, to go, hey, I know I'm 500,000 in revenue. I'm growing. I'm expanding. My cash, I should track it better. I shouldn't, there's got to be an open conversation, because I think what ends up happening, there's always something they're holding back. I'm not saying put all the cards on the table, but be transparent about your financials, about your situation. If you struggle with them and saying, you know what, I need to do a better job at them. Okay, great. How can I help you with that in order to get you to the next step? Because I think in most cases, when a business owner gets a no, it's a no for now. It's not a no forever. It's just a no based. You don't have some of the basic information the bank requires to give you that loan, and having sufficient financial information that makes sense to do that loan. Because, every year and over the last 10, 15 years, regulation that we have to abide by is not slowed. It's gotten dramatically, I'm not going to say worse, but the levels have been raised quite a bit. So it's kind of handcuffs us to say, yes, we'd like to help you, but I need you to help me by getting this to me. And in some cases, it really is just tax returns and information and being timely in having that information. So when you do go to see your banker, expect they're going to ask you for minimum tax returns. If that's all you have, show up with 3 years or 2 years, whatever you have, show up with it in hand and say, this is what I got. This is who I am. And let's take a look at it. So, that helps tremendously.
So Gerardo, again, I think this is an issue that every small business, every major, I don't care, every business deals with once, twice, or every year in their business. They're always looking for money. And I really appreciate you giving us a little bit more of an insider look where maybe there could be better understanding when somebody walks in the door to talk to a banker. Hopefully, in many cases, it'll be you, and your information down below in the description. So we're hoping people will pick up the phone and call Gerardo. But thanks again for coming on Small Business Daily today.
No, thank you. I appreciate the time. And like you and I, we're always here to help.
Okay, great. Well, this is Randy Kirk, Small Business Daily, and we will see you next time.